Hello and welcome, as it is the completion of the 24th day of February 2019. My name is Derek All Bets Trades of the like, within each his own risk and their own reward. The fact that the market is doing what it is doing, having the significant up move, yesterday's session going from 39 low to 41 high, or close to 10%. And then having a much greater decline in today's session with this very large single red candle down move at 9 a.m. this morning. And with such a large move and such little for rally attempt since, the market has remained below this 18 average. When we think about this hourly chart, and even for that matter, how the movements of these two individual daily term candles work, do you think we're really going to care too much about this on February the 25th, 2020? Or 3 months from now? This is just part of normal market movements. And when we look at technical analysis and we do the happy face, circle, cup, bowl shape, bowl might be the best word to use, pattern, where we have the upper end here, we have the downtrend of these lows, at the end of 2018 and for the first month of the year, or January. And then we make these higher lows. But we notice the empty space in here, this part in here. Well, this is the first time it managed to make it up to 4,100 since back at this point. It was the first close above it since back in the end of start of December, end of November the previous year. And as I've mentioned before, this is that situation I don't usually like too much, where as far as predicting where we're going to go, when I say don't like it, because it's so hard to guess. You come up to a level of potential resistance, and sure enough it is. On a bullish level, it's not a surprise to do so. So therefore, on a bullish case, coming back and holding that key area, so we can see in here this major level of previous resistance, now in at the 18 lows, is very important. Definitely a statement being made on the bearish side. And in a situation, if it is able to get above this 18 average, which right now is standing at 30, or placing in at 38 and 3/4, so therefore breaking above 39, well, that tells you there that the odds of this thing, especially if you're talking 39 1/4 to a third, that we're heading back up to 4,100 is, well, it's definitely on an alert situation. Also, and it gets up there, we're at, say, 4,100. Well, we're no longer as overextended as we would have been yesterday at that price point. And it also becomes more likely you break it out. And then the target level for breaking this out is 48.5. And this target number was placed out, I gotta think I put this wrong, December 18th. Either on this day or this day, I put these lines in, and I haven't removed them since. And they have been that of key levels. So therefore, if you were trying to state that the market was going to go to 4,200 as an example, and you go, I want to sell her at 41.97. Okay, well, went to 41.88 and you missed. Okay, well, 4,100 was your level. Well, I see this. Let's do a pierce below. Let's do 4,095. Okay, your seller hit there. And if you said 4,000, you didn't get as good of a play. But right now, especially, you're right. But you're only right in that sense if you're looking to make better with how you trade it. And in the easy example here, are you able to buy it back at a cheaper price? It's like a parlay. Not only do you have to predict that it's an area where resistance would be found, but predict that it's going to go down to a certain level where you can thus complete a winning trade. Okay. So then, where we see this in now, supporting this key level, if we see weakness in here, this is definitely bad news. For once it made this statement on February the 8th, it correctly held via that of support. It correctly had a very good breakout to its intended target. Thus such, it's to say that this is a must-hold statement near 3,600, to me that's an understatement to say the least. And if we look at the polar opposite on TUSD, within it, it had, of course, this up run from the November lows, established this level of support. It upgraded its level of support to around this area here, which of course is where it came to yesterday. You're really on a bullish level after it got out of this neutrality mode in here, thus attempting to resume a bull market and keeping along at an extremely slow pace, but holding its support area, thus keeping it moving and afloat, and then progressing its way, okay, maybe halfway to its intended target, which is previous high. That itself was a concern as it was a decline. But it also spent a lot of time coming from point A low to this high. So therefore holding this little area in here, which originally it was doing so, was very important. No surprise on a technical analysis, breaking down by the support, you go to your minimum target, which was this level. It did just that. Again, technical analysis, if you're looking for buy spots, you buy a pierce above this low in here, so you're looking at about, in this case, about 24.2. And you can see that the low today, well, it's below that, it's 23.8. So it would have obviously worked out just picking a previous low, and that's easy to find, no mathematical calculator needed for anything amongst that nature. And when it breaks down like this is telling you bad news after all of this. You find support where you're supposed to. This is a spot where it's both bullish and bearish to go up. For now, after making that move, it's resisting where? 18 average of highs on this, that's newly declining, as well as this previous level. That's, of course, it's a potential resistance on this level. But as I was mentioning with Bitcoin, if it's able to break above its 18 average of highs, in this case break down below the 18 lows, you're seeing the classic signs of your market reversals, and pretty phenomenally big. That's a big move, a big situation in play. Thus breaking down below the support after today's action, thus further establishing the Bitcoin resistance, and in this case support here. Within LTC, or that of Litecoin, also coming down to its 18 average of lows, piercing below but in the area of its previous high, so its congestion level, it's also at this previous level of resistance here from February 12th through that of the 17th. It's above this line at 38.23, which represents a 38, interestingly enough, represents a 38.2% down move lower. And a 61.8% down move is $31.09, which would indicate I'm going to say a must hold, but when I look at Litecoin on the overall scheme of things, and I looked at this earlier for about a half an hour, I do think there's still a decent chance that the bottom is in. Now, I also think it's something worth noting, because of this a better move that Litecoin has had since its lows compared to Bitcoin, maybe it might be possible Bitcoin does have one leg lower to 2600, 2400, and it would have to be in the 2000s for this case to be this true, I would think, where this would only go down to its previous low, maybe to 23 or 24, or 22 or 20, and actually no, 21, and maybe even piercing below to 20, because we can see in this low in here, this low from December the 14th is $22.24. I don't have it on this chart, but if we take the 2017 lows of like a few dollars, like $4 or $3.50, I think it's $3.55, and we take the highs from 2018 over 300, a 61.8% move down is $21. In this case, it's a pierce above, and that's the rarity, but it's what happened. And that's one reason why I think there's a decent chance where we might have already seen these lows, and it's already got a decent enough gain where a decent enough loss still makes a higher low from this point on. Couple legs lower could do so. There's a lot of legs lower for the market going forward. But to me, I'm going to clarify the four numbers, two of which that are shown, 38 and 31. Below that, that previous low at 22, and even in between, don't be surprised if there might be some support in the middle part of this area, somewhere in the 26 area. And then below this, we're talking 10 bucks. Because that would be a 76.4% down move from that area of the 2017 lows and its highs. But just like in Bitcoin, when this market here was up in this point, at 45, it was really overextended. It wasn't as overextended on February 18th. Especially now that it's made a move to the 18 lows rather than here at the highs. If it does manage to get above to say 52, then we'll be looking for the move to go to, I think it's 63. Let me just take a quick look at the number. And sure enough, it would be that 63. So the Fibonacci that I was talking about, from this low in here to this high, 38.2% down is actually the same number here at 63, so coinciding with another Fibonacci number, which only makes sense given that this was really a hit. It just often it pierces below, or at pierces extra rather. But if you calculate the low here at 355 and the high of 370 and 2/3, that number divided by that to the root of 0.382, which represents 61.8 down, or 38.2 up. So 38.2% of the way from here to here is 21, and a little bit above it, like 21.04 or something in that nature. But by placing a line in that area, that's 2096. Now that's just a case of a pierce above. But when I look at the three ways a market hits the level, above, below, or right on, pierce extra, the extreme rarity. Pierce below or extra, that's the extreme common one, or the favorite. And the one in between is pretty much an exact hit. When I say pretty much, I mean you got to use your eye test. Where if say a level, if this would have went down even just if a 30 or 40, 50, like 40 cents more, then you would have been starting to talk about an exact hit, even if it was like 5 or 20 cents above such a number. And this is 2096, so it would have been probably closer to this level right around in here. And furthermore, within this move, after you go down like this, consistently below the 18, it's gotten above it, 2 pause periods. Where do we see the 18 average in here? That's in at 32. And 32 and change, but definitely want to talk about it's okay to pierce extra. So 31 is totally a little bit of a pierce extra. That pretty much is your must hold area, because if it shows weakness amongst there, if it falls rapidly from that point, and you've seen it had a move like this, and it actually used energy and effort to attempt to revert the trend, and it failed amongst its efforts, then you oftentimes will get a decent size failed move to the opposite direction. And finally, let's look at Namecoin. This one making me really sick right now. Not literally. However, I did put a buy order in here for a couple hundred, 300 bucks worth or so at a hair above 10. And I removed it about a couple days ago, somewhere in here. I'm thinking, you know what, I'm just a few, there's better coins than this that I can aggressively start to enter into positions for. I do like the way this moves though, which is why I didn't want to. But the low for today's market, 10,000 even. And I had a small hair above that, like 10,020, 10,030, somewhere in that area, which would have meant, had I not removed the order, I would have seen, oh, it buys, and how would it have happened? Because I'm going to look, yeah, oh my, wow, relatively interesting. If I would have seen just now, like, oh, buy order filled, buy at 10,000, I'm seeing it's at 14.9, I'm making a big sell order right now. Probably selling a quarter of what I bought instantly. Definitely 20% anyway. And then I put my buy order back in for 10. Put another sell order in. Well, put my second sell order in rather. For some other higher number, it would be probably like, I don't know, like hair below here, so like 17.9, maybe 18.495 or 18.795 area. But that is how it goes. And we'll actually finish it with Theta. Fibonacci from the side of this low. Definitely supporting big time here. 18 is starting to flatten out, which means it's becoming more neutral. We can see a lot of symmetricalness, a lot of lower highs over since the top on February the 14th. And this has been an uptrend, obviously making higher lows since mid-January, but you have this low in here on February 19th, and that hasn't been erased. It did make this low today higher than this, but there's still, to me, it's simple. It's got to break this direction one side or another. Maybe it has the potential to have an extended range in between this 26 and this 22 spot, but breaking the levels I just mentioned amongst the ranges, breaking here, I'm looking forward to probably go to 17, maybe even into the high or mid 16s or low 16s even. And breaking out above this level of resistance, then we're talking about one of three things. And there could only be three things. There's no other options. And it has to have a significant break. Like 28.41 is not significant break. Either A, which I think would be the favorite, but maybe only by a little bit, and that's resistance near the previous high. Could pierce below, could pierce extra, but in the area of 3,500, give or take. The next one is a significantly large move, 5,000, 6,000, and who knows how much higher there after that. And the next one is just in the area of like in between here. Generally speaking, if you have a move like this and it corrects as well as it does like this, if it breaks resistance, you got to give full credits on the bull run for a significant move. And I think it's extremely conservative to think that 3,100 area, 3,000 would be a case for resistance. Just like it's extremely conservative to think that, I mean, you could get a failed breakdown, but around 2,000, 20.5 area would be a great spot. Now, with that being said, mathematically speaking, if you're buying at 20, even though you know it might go down here, well, you're getting that better price, especially if you sold up here and you're just trying to get your buyback at a better price. There's nothing wrong with that in that sense. But for me, if this thing goes down to 1750, which is where currently my lowest buy order is, with my highest in at 21 or 2200 rather, but 2200 is my lowest. 21, yeah, 20. Already hit 21. Yeah, hit 22. I didn't buy there. So about 2150, I think, is my highest. My lowest is 1750, or a hair above that. If it goes there, I will increase my theta more than 50% more. So if I was to actually have a choice, or if I was to cheer for one side, I hope it does do this come back to here and then rally higher, just because then I can get my buybacks retained. And if I sell like 300 up here, maybe I'm going to buy back 430 or 390 or whatever the move is. Or even if I'm selling 300, maybe I'm getting back 380 even. But I'm doing that over and over and over many times over because I've had a lot of sell orders that still need to be refilled back to the buys. And if it doesn't and it just goes higher, well, then I'll have what I have in my theta. And if the market goes up like 50%, then I'll sell maybe 20% of what I got. Thank you for tuning in, and have yourself a great day. Bye-bye.